Welcome to the Daily Business and Finance Show. Unpacking Biden's strategy to boost essential drug production, Zscaler's impressive earnings beat, and record-breaking Black Friday online sales. Plus, Elliott's massive stake in Crown Castle, iRobot's plunge amid EU warning on Amazon sale, BYD's potential valuation surge in the EV market. We'll also delve into the most underowned large-cap tech stocks and airline seat capacity adjustments for industry challenges. Stay tuned after this short ad break to learn more about these compelling stories. President Joe Biden plans to utilize the Defense Production Act of 1950 to enhance domestic production of crucial drugs. This action is a component of a broader supply chain resilience strategy, which will involve an investment of $35 million in primary materials for sterile injectable medications. It is anticipated that major U.S. pharmaceutical and medical product manufacturers will gain from this initiative, which aims to decrease dependence on foreign suppliers considered high risk.
Zscaler's first quarter results surpassed expectations, posting a non-GAAP earnings per share of 67 cents, which is 18 cents higher than estimates. The company also reported a revenue of $496.7 million, marking an increase of 39.7% compared to the same period last year. In addition to this, Zscaler showed significant growth in calculated billings and deferred revenue while successfully reducing its GAAP net loss to $33.5 million from the previous year's $68.2 million.
Online shoppers in the United States established a new Black Friday record by spending $9.8 billion, marking a 7.5% rise from the previous year, as reported by Adobe Analytics. The most popular items purchased were smartwatches, televisions, toys, and gaming products. There was also a significant increase in Buy Now Pay Later sales, which reached $79 million, showing an upsurge of 47% compared to last year. Additionally, Thanksgiving online expenditure grew by 5.5%, reaching an unprecedented peak of $5.6 billion.
Elliott Investment Management has procured in excess of $2 billion in shares of Crown Castle, an owner of wireless towers. Elliott is pushing for alterations to the board and a comprehensive review of Crown Castle's fiber business, attributing underperformance to the present leadership. In reaction, Crown Castle has shown willingness towards constructive interaction with Elliott, all while upholding faith in its executive team.
The stock value of iRobot plummeted by 20% in response to a cautionary statement from the European Commission. This warning pertains to possible competition limitations in the robot vacuum cleaner sector, triggered by Amazon's proposed acquisition of iRobot for $1.4 billion. The Commission, having previously signaled its approval, now has a deadline until February 14 to reach a conclusive decision.
Bernstein's analyst, Tony Sacconaghi, has once again recommended an outperform rating for BYD Company Limited, a prominent manufacturer of electric vehicles. He believes the current valuation disparity between Tesla and BYD is unwarranted considering their similar size and growth trajectories. Despite Tesla's superior market capitalization, Sacconaghi contends that BYD's accelerated growth and more extensive battery energy storage business could result in parallel valuations. Just last week, BYD celebrated a significant achievement with the production of its 6 millionth new energy vehicle.
According to Morgan Stanley's U.S. Tech Report, Microsoft is currently the most underowned large-cap tech stock for this quarter. There is a notable strong correlation between low active ownership and future performance, yet Microsoft's institutional ownership continues to trail behind its S&P 500 weighting. On the other hand, Meta Platforms holds the position of being the most overowned megacap stock at present. Other stocks that are considered underowned include prominent names such as Apple, Nvidia, Amazon.com, and Alphabet.
Despite a decrease of 13.2% in the affordability of airline travel, it is anticipated that high demand during peak times will maintain a positive outlook for the industry in the upcoming year. This statement comes from Savi Syth, an analyst at Raymond James. In response to these changes, airlines are making adjustments for off-peak periods and dealing with fuel costs that are 50% higher than those seen in 2019. Delta Airlines and Alaska Air Group have been highlighted as stocks that are well-positioned.
That's it for today on the Daily Business and Finance Show. Stay informed, stay invested. Until next time, keep turning ideas into wealth. I'm Montgomery Jones.
And I'm Amalia Dupre. Until tomorrow, stay safe and farewell for now.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. Check out our other podcasts in our network at classicstudios.com.